If you're not sure what documents you need for a mortgage application, then in this video we're going to be discussing exactly that. We're going to be going over the main documents you'll need for a self-employed mortgage, and we will discuss some employed scenarios as well, because I know that some of your partners may be employed and we do still get some referrals for employed clients too. We'll also chuck in some examples of some documents that might not be acceptable to a lender. Hi, this is Sam from Rosehill Financial Services. We help business owners and the self-employed secure their first homes and forever homes. If this is your first time watching, then do consider subscribing to the channel, and we'll bring you regular content to help you in your buying journey. So first up is your proof of ID. When applying for a mortgage, you're going to need a proof of ID to satisfy the lender's money laundering requirements. Now, we do carry out electronic ID and address verification, as will some lenders. So this means that some lenders might not actually need a physical proof of ID, but there are still some lenders out there that will still need you to send in a proof of ID. So it's best that you gather this just in case. For this very reason, we still do request a proof of ID. Examples of a proof of ID might just be a passport or a driving license. Any documents being used as a proof of ID will need to be current and valid. You'll either need to bring in the original documents to the bank or your mortgage broker, or you'll need to send in a clear scanned copy. Accompanying your proof of ID will be your proof of address. This document will need to evidence that you live at your current address and will generally need to be dated within the latest 3 months of your mortgage application. Although this might not always be the case, some lenders do allow for some documents to be dated within the latest 12 months. Examples of proof of address might be your driving license, a council tax bill or utility bill, or a posted bank statement, all of which will need to show your current address clearly on the document. On a quick note, if you are using your driving license as your proof of ID, then you can't use this as your proof of address. Again, we will look to verify this ourselves electronically, as will some lenders, but there are still going to be those lenders that do request this proof of address. That being said, any of these documents mentioned must be the posted versions if the proof of address is required. This can be a bit of a pain, given that most of these documents these days are electronic, so do be prepared to request this document from your bank or your utilities company if required. So next we're going to talk about your proof of income. Your proof of income will vary from lender to lender. Some lenders might only want to see the latest 1 year's accounts, whereas others might want 3 years accounts, for example. We always gather the latest 3 years accounts if you do have that available. If not, you can send over what you have and we would look into that, because this saves more of the back and forth if we start looking at a lender with only 1 year's accounts but need to go with a different lender that might request 2 years for any particular reason. So to avoid too much back and forth, here's what you should be gathering from the beginning. Firstly, you're going to want to gather your latest 3 years SA 302s, which are now known as tax calculations. This is essentially a self-employed person's P60, as it will show your earnings over the particular year. If you don't have 3 years tax calculations available, then just send over to your broker what you have, and then they can advise you accordingly. You'll also need your corresponding tax year overviews matching the tax calculations that you sent over. You may also want to gather your SA 100, which is a more in-depth version of your earnings over that particular year or years, although this isn't always required by lenders, but it's handy to have. If you're a limited company owner, then you're going to also want to gather your latest 2 years signed accounts showing 3 years figures, or what you have if you don't have 2 years or 3 years available just yet. And when I say signed, it would need to be signed by your qualified accountant. As a quick note, if your income fluctuates quite heavily year on year, or if you've had a large increase in profits or even a slight decrease in profits in the latest year, then lenders might also want some sort of explanation for why that is, and we would also keep that on file just in case the lender asks for any further details. And depending on the lender that you end up proceeding with, they might also want accountant's projections as well for the following year's income. If you're a self-employed contractor, then it's also good to have available your daily rate as well as 2 years contracting history if possible. If you're self-employed in the construction industry and you're paid through the construction industry scheme, so you get your CIS payslips, then we can actually look to use your gross CIS income as opposed to your net profit from self-employment. This generally allows you to borrow a lot more, and we'll make another video on this very shortly. But in these scenarios, we'd also look to gather the latest 3 to 12 months pay slips depending on your particular situation. So it's good to have these pay slips readily available for your mortgage broker. And lastly, if you are employed or your partner's employed, then we'd look to gather the latest 3 to 6 months pay slips along with 1 or 2 years P60s. If you don't have that available, then discuss it with your mortgage broker. Some lenders can look to take a new job in advance with an employment contract or potentially 1 to 3 months pay slips in that new role. But if you speak to your broker about your situation, they can advise you accordingly. For all proofs of income, we're going to also need your income credited bank accounts too, which we're going to go through in just a moment. So for bank statements, we're generally going to need the latest 3 to 6 months bank statements showing your full income and expenditure. Although this can be more depending on your particular circumstances and what the underwriters might request when you go to apply for your mortgage. For limited company business owners, this would also include your latest 3 to 6 months company bank statements. If you use a credit card or a charge card for the majority of your spending each month, then it's likely that you're going to need to supply, again, the latest 3 to 6 months credit card statements, just so that we can get a full idea and a breakdown of your expenditure each month. At Rosehill, to avoid any delays in the process, we always gather the latest 3 to 6 months bank statements for all accounts held. This allows us to have details on all income and expenditure, and if there's lots of transfers between accounts, we'll know exactly what that's for. A quick note on bank statements: these must be full monthly, quarterly or annual accounts. So they can't be transactions lists or screenshots of the bank statements. They must show all details, including the account name, account number, sort code, your current address, and so on. None of these details can be blacked out whatsoever. So on to the proof of deposit. Now, generally this would make part of the bank statements that you provide, but I think it deserves its own section of this video. When showing proof of deposit, it's not just about showing the exact amount of your deposit in a bank account. Lenders want to see the build up of those funds as well and know exactly where the deposit is coming from. If the deposit is coming from your personal savings, then it will just be the latest 3 to 6 months bank statements showing those build up of funds, which is why that's what we generally gather. If the proof of deposit is coming from the sale of your existing property or a mixture of both, then we're going to also need your memorandum of sale for the property that you're selling, along with a mortgage statement to show how much you owe on that property. If any of the deposit is coming from a gift, so for example a family member such as bank of mum and dad, then you're going to need the latest 3 to 6 months bank statements for the accounts that are gifting the funds to you. Again, none of the details on these accounts can be blocked out. So we're going to need the full name, address, account number, sort code, and so on. So whoever's gifting you the funds has to be comfortable with providing this information. If the gifted deposit or your personal deposit is coming from abroad, then you're going to need translated bank statements as well in most circumstances. So it's just something to keep in mind when you're gathering the documents, as this can take quite some time. If there is an element of gifted deposit, then the person gifting you that deposit will generally need to sign a form to say that this is a gift and not a loan, and that the person gifting the deposit has no interest in the property at all. We would send out a template for this, so you don't need to worry about what needs to be written on the form. So if you want an example of that, do just get in touch with us. Lastly, we're going to talk about your credit file. In my opinion, it's important to look at your credit file in advance. I get a lot of people asking me about their credit score, or coming to me saying that they've got a 999 credit score on Experian, so they should have no issues. But I always say to my clients, ignore the score, at least for mortgage purposes. It's all well and good having a 999 credit score with Experian, but we've seen far too often that there's been some element of adverse credit showing up on one credit bureau but not the other. So you might find that you've got a 999 credit score with Experian, but Equifax has picked up a missed payment on a certain credit card. You're going to want to check all credit bureaus, ideally, just to make sure that there's nothing out of line. For this reason, we recommend Checkmyfile. There's a link in the description of this video because Checkmyfile hold information on 4 credit bureaus, not just one or the other. So once you've got the full report, take a good look through or pass it over to your mortgage broker for them to take a look, just to make sure that there's no nasty surprises. The reason that we gather a credit report is that lenders will be using this information to see what adverse credit you might have or what commitments you have and whether or not you're on the electoral roll. And speaking of electoral rolls, it's really important that you do register yourself at your current address. It's really simple to do, but it's quite easily forgotten and can make quite a big impact on your mortgage application. So there you have it. We've gone through the main list of documents that you're going to need for your self-employed mortgage. Ideally, you'd have these documents gathered and over to your mortgage broker as early into the process as possible. So before you go out and put offers on properties. Reason being is that your mortgage broker can check over these documents, make sure that nothing seems out of line, and they can also let you know what your maximum budget is and how much that's going to cost you each month. Please also note that this video is served as a guide. These are the main documents that we generally request for clients, but depending on your circumstances, further documents might be required. Also, once you've had an application submitted, those documents that you initially gathered might not be the only documents required. Post-application, a lender can request further documents where they see fit. So let's hear from you. Are you looking to prepare yourself for a mortgage? Do let us know in the comments below. If you'd like any further information at all, then don't hesitate to leave us a comment below or get in touch with our team and we'll be happy to help. We do have guides available on our website. All links are in the description below. Before I let you go, as always, I'm obliged to tell you that as a mortgage is secured against your home, it may be repossessed if you don't keep up the mortgage repayments. Thanks again, and I'll see you in the next one.